And we're live. Welcome, Internet, to Geeks and Gains. Today, I will be discussing high frequency trading. In addition to discussing high frequency trading, we're going to talk about just briefly what's going on with GameStop and why the argumentation on what's going on with GameStop will be completely debunked by our observations of high frequency trading. Now, you might be asking yourself, what on earth is high frequency trading? Great question. High frequency trading, also known as HFT, is a method of trading that uses powerful computer programs to transact a large number of orders in fractions of a second. It uses complex algorithms for people like me who can't understand it to analyze multiple markets and execute orders based on market conditions. What this means is there are giant, think supercomputers of the 1960s in which they took up entire warehouses. Well, now we've condensed them down and made them, according to Moore's law, more efficient with the transistor size doubling almost every 18 months. So now we have like supercomputers that are crazy fast, even quantum in their levels. And what they do is they take these giant computers and they put them as close as they can to the NASDAQ or the trading areas, and they use their superior information bandwidth and technology in order to execute trades at almost instantaneous level of transactions. So what does that mean for us today? Well, anyone who's been following anything on the internet, you've heard of what's going on with GameStop. Even if you don't truly understand it, let me give you the 1,000-eye view. You can take a stock. What is a stock? A stock is a valuation of a company. It's something that individuals issue to try and raise capital. So if I have a company, which I have several companies, so let's take Certified Jiu-Jitsu. All right, let's say I have Certified Jiu-Jitsu. I'm now making millions of dollars, and people say, hey, you should go public. What does it mean to go public? It means I go to the public and ask them to raise money by issuing stocks. So if I issue stock, you say, hey, I think your company has a current valuation of, $10 million for easy round numbers. I issue, a million stocks, boom, $10 a stock. There we go, 10 million. And so everyone looks around and says, yep, cash flows make sense. The money coming in, money coming out, $10 a share. That makes perfect sense. And then someone else comes along and says, oh, no, I think you're undervaluing how important jiu-jitsu is going to be in the future. So why don't we invest in your company? I anticipate the price is going to go up. I buy low at $10. It's like Tesla. It skyrockets. And now it's $1,500 a share. I sell and I made a ton of money because I'm a smart guy. And I saw that jiu-jitsu was really important. Now, there is another market, an ancillary market, a secondary market, as you might say, in which there are individuals with large sums of money who essentially can make bets. That's really all hedge funds do. It's really just a very sophisticated form of gambling, sometimes using supercomputers, as we talked about with high-frequency trading. And they essentially come along and say, well, GameStop, for instance, is not worth $20 a share. In fact, it's worth $10 a share. And I'm going to go on every major mainstream media organization to let them know how much GameStop sucks. However, they miscalculate and say, oh no, the internet seems to disagree and would love to see billionaires crying at home alone in their yachts. And that's exactly what happened. Individuals across Reddit came together on a common theme or on a common thread. They all decided, hey, we want to screw over these over-leveraged stockbrokers who are essentially trying to short the stock. So essentially they buy it at $20. They expect it to go down. They're going to pocket the difference. That's really what short selling is. We expect this stock to go down. We borrow those stocks at a certain price. We buy them back whenever they're at a lower price, and we keep the arbitrage, the difference. We make that difference up. Okay. So why does high frequency trading matter? Well, because there are individuals who are going to come along and they're going to say, well, the stock market's not supposed to work this way. So we got to take control of everything. That's what's going to happen. It's going to happen. If it hasn't already happened today in the news, I promise you it's going to happen. Someone's going to come along and say, this isn't how the stock market's supposed to work. The stock market's supposed to be a good faith valuation by which people look at the liquidity and the income statements and all the different financial tools that we have to say yes or no, this is a good solvent company and their price is going to go up or it's not going to go up. However, what about high frequency trading? We know that in 2010, high frequency trading, according to the SEC, at least led to a partial contribution to one of the largest single day drops in the Dow in 2010. So, and let's be very specific here. It was known as flash trading, or so essentially where there is a unexpected hiccup in the algorithms in which things are bought and sold very, very quickly on ways that are uncontrollable until after the fact. And so here, someone's going to come along and say, well, this isn't how the stock market's supposed to work. Well, it is. This is how it's supposed to work. Individuals are supposed to be able to buy and sell freely as they seem fit. Whether or not a stock is overvalued or undervalued, certainly it's overvalued at this point at nearly $350 a share, even though when I woke up, it dropped nearly 85%. So anyone who shorted last night is probably making some serious bank. You have these major institutions that come along and say, well, we are losing too much money. We need bailouts. We need to shut down the ability to trade, which is anti-free market, anti-capitalism, and really has seen government involvement getting involved. I've seen reports of the White House making calls on something like this. There's already been announcements that there's going to be Senate investigative hearings into this. And really, that's unnecessary because all that's going to come out of it is them trying to regulate what private, small investors can do without increasing the investments that are happening in the large commercial entities. It was John Maynard Keynes who said that banking, specifically commercial banking, is essentially a giant lottery. It's essentially a giant gambling engine. And if you don't have massive regulations on commercial banking, that's what happens in 2001 when you have dot-com busts. That's what happens in 2008 when you have subprime mortgages. You have credit default swaps, mortgage-backed securities, all of these different institutions and tools that have shown to be essentially a house of cards have happened for years. And so the notion that now somehow things have gone awry is just a joke. It's absolutely not a good faith argument. It's not something that should be even considered. As long as high frequency trading is available, in which individuals, the 1%, have all of the resources and tools and instrumentalities to use on their behalf, that the rest of us just could never have, right? Like I'm never going to be able to afford as an individual a $50 million computing system, right? It just can't happen. But there are massive institutions that have multiple different approaches, different tools in high frequency trading that allows them to essentially have, it's not insider information, so it's not technically illegal, but it is, it's like as fast as light communication between the trading institutions and the companies, which is just intrinsically unfair. And so now one of these bets finally doesn't pay off for them, and suddenly we have to have a major, massive outcry. So that's what I would have people on Reddit and TikTok and every other social media talking about, which is, don't let Congress get away with passing some sort of immediate legislation. Hell, they can't even pass a stimulus package for $2,000, right? It is now January 28th, 2021. We had the first briefings of coronavirus, in which, oh, surprise, surprise, the senators who had that briefing immediately went and sold their stocks. They didn't pass emergency legislation. They didn't shut down the country first. They went and said, oh, let me check my money. I got to go check my money. I got to call. I got a meeting. I got to go. Oh, no, the country's going to shut down. I got to go. I got to go make sure that my money is taken care of. And this is the epitome of what was referred to in economics as crony capitalism. Okay. Even if we had something that was remotely close to capitalism in this country, when you have large money interests who can buy and sell the political dialogue, either in major news organizations, individuals that can buy and sell the political dialogue by, it's tantamount to bribing whenever they go in and say, well, we'll give you $50 million in campaign contributions as long as we get a little bit of kickback, a little bit of log rolling is what we call in political science. How do we get our kickbacks from the investments that we've made? We got you elected, so now we expect something in return. A little bit of squid pro quo, as we say, squid pro quo. But seriously, these are things that happen. They happen every day, and the rest of us are supposed to just lie down and take it. I closed out my Robinhood account that didn't have much money in it to begin with, but the few $100 that I had, cashed everything out. I'm shutting it down because Robinhood has itself affected the market. It's preventing people from trading. How is that legal? Class action lawsuits, I think, are going to go very, very poorly in their favor. If there are people in Washington state that have been duped by this, Washington has a massively punitive consumer protection law, which I think is very applicable to this type of trading. I mean, they're essentially forcing people's positions to sell at a half or a third of the cost of what the actual stock is valued at. Definitely doesn't seem legal to me. And in my experience in these type of security issues is not going to be positive for Robinhood. And, I mean, I think the big takeaway here is, number one, don't mess with the internet. The internet remains undefeated. Okay. So the notion that individuals have somehow corrupted the system. This is how the system is supposed to work. This is how it's always worked. It just didn't happen to work out in front of the massive hedge funds, in which individuals who have this type of power, oh no, suddenly their power didn't work out in their favor. Well, them's the breaks. I mean, that's the rest of us in this country who are struggling, who have, have our businesses have suffered. We've been locked down for months and months, and you're out here playing, gambling with GameStop stock, and that's supposed to invoke some sort of response other than, yeah, well, sucks to suck. I mean, that's really it. There's really nothing else to say. Is as long as things like high frequency trading, mortgage-backed securities, the gutting of the Dodd-Frank Act, the rollbacks of Consumer Protection Finance Bureau, the rollback, I mean, they just announced that debt collectors can now text and call and email you and contact you on social media. I mean, the notion that the income inequality in this country should invoke anything other than just discontent is really just a joke. I mean, just give us a break, okay? If the government comes to the aid of this, kick them all out. Again, I mean, Congress is already so fractured. We already have a 50-50 split. They're already going to be so hard-pressed to pass anything. They can't pass student loan forgiveness. They can't pass. I mean, here's something from the student bodies, from us recent graduates, people who are working stiffs who took out loans on the concept that you work hard, you get ahead, and it's going to pay off. Well, how about you just eliminate the compounding interest from undergrad and graduate loans, okay? So the non-subsidized loans, these loans that the moment you take them out, they begin accruing compounding interest. And then because Congress doesn't pass a sunset or doesn't renew a sunset provision in which the interest rate was 3% and now it goes up to 8.5% and you have no negotiation, and this was a contract that was signed before you went into college, and while you're in the middle of college, your interest rates double. And they're like, well, you can pay it off when you're in college. How? How do I pay it off when I'm in college? Particularly when I'm in law school, and the American Bar Association doesn't allow you to work while you're in law school more than 20 hours a week after your second year. How are you supposed to pay it off? So we have individuals who are taking back the power, who utilized legal tools, who utilized online communications, no insider information. They said, we're going to screw these guys over. We're going to force the price to go up. And hey, it happened. And guess what? It was supposed to happen that way. That's what happens when you make a bet. You lose. Sometimes you pay. I mean, what did Qui-Gon Jinn say? If you gamble, eventually, my friend, you're going to lose. And that's what happened. You lost. You lost big, and you deserve to lose. Honestly, none of us are going to be writing home about how we care about the fact that you lost tons of money. No one cares. So just from a general perspective, keep in mind that you should be able to trade however you want, if that's how they make the system. And the notion that we should now care about what some large hedge fund is doing. No, thank you. Today, we're going to just acknowledge how great the internet is, how undefeated they are, how you should probably not cross them, and give thanks. Give thanks to, these people on Reddit who went out and even in a very small way demonstrated the power of collective action, the power of free individuals making an example out of people who, I mean, they profiteer on company suffrage, on the loss of equity and value in companies, oftentimes speculative, oftentimes not backed by true analysis. And whether or not GameStop is supposed to be at $300 a share or not is immaterial. It doesn't matter, because I mean, at that point, it just illustrates how fictitious the entire system is. It just demonstrates that these are just speculative numbers that, because of things like high frequency trading, as long as high frequency trading exists, get over it. Okay. As long as we can have millisecond millions of transactions moment to moment, then people aren't doing what stocks are supposed to do by looking at financial statements and income statements and saying, yes, no, I believe this is going to be a good payoff. All right. That's not what's happening. So let's give it a break, guys. All right. So keep it up. Let me know, internet, what the next stimmy checks are going to be spent on so we can all become multimillionaires while screwing over hedge funds. I'm happy to ride that train. Probably not. I'm pretty risk averse. That's why I'm in the position that I am, because I'm so risk averse that I don't know when to take chances at the right time. And then when I do, seldom seems to pay off. But that's a different story. I want to thank everyone for tuning into Geeks and Gains. We will continue with geeking out on any new developments that happen in economics, finance, the law, and outside of that. If anyone wants to follow my jiu-jitsu page, where I try to be far less political and far less economic, check out Certified Jiu-Jitsu. If you'd like to follow my actual legal page, you ever need a legal consultation, I do a lot of civil work, contracts, family law. I've done a lot of products liability, personal injury, things of that nature. All right. So check out latenightlegal@gmail.com. I do some estate planning as well. Those are all things that I do on the side. So thank you for tuning in to Geeks and Gains. And next time we will focus more on perhaps a workout this time. I'll let you know what my workout schedule has been like. Because of the lockdown, training has been difficult. I'm currently suffering from some injuries, so I'm working on some rehabilitation. So some more information to come in the future. Thanks for tuning in. And this has been Geeks and Gains.